All right, so I wanted to go over my trades for last week. So the week ending February 19. Total profit for last week was $542 US net profit after commissions. And this is all from selling options with Questrade. So mostly put spreads and naked puts and covered calls. But even more specifically, I would say naked puts. So let me go through my trades. Didn't have many or didn't close many last week. So first of all, the first one here is Baba, a put spread, but this was an old trade that I was trying to save. I ended up closing it for 6 cents. I had a net credit of 14 cents. Now, the reason I only had a net credit of 14 cents was because when I first started the trade, I collected $1. And then when I rolled it for a debit. I paid to roll it just to try to save the trade. And then I rolled it again for a 20-cent credit. And then I was able to close it for 6 cents. So it's been a while I had this trade. I've had it since November 10th. I finally was able to close it for a small loss of about $5. And then January 21st, I had a stick covered call. So I went with a 15 strike and I got into the trade paying only $13.14. So that means if stick is above 15 come expiry of February 19, I can close the trade. The max I can close this trade for is $15. So my max profit on this trade is 15, the difference between 15 and 13.14. I closed it a little bit earlier. I closed it February 16, so 3 days before expiry. I closed it for 14.83. So that gave me a net profit of $157. And then I had a naked put on Fubo at a 35 strike. When Fubo was trading at around 43, 44, I actually had 2 contracts. I accidentally closed only 1 contract. I meant to close 2, but I accidentally only put an order to close one of the contracts. And I closed it for $3. So that gave me an $88 net profit. Now, if you look at my open trades, you could see that I still have Fubo down there. So over here, I still have Fubo, and if I were able to close it for $3, if I paid attention and closed both contracts, probably this week would have been at least $100 higher, and I would have saved on commissions because now I'm gonna have to pay commissions again to close this trade, an extra $5 to close this trade. So now I'm trying to close it for less than $3 to make up for that $5 commission that I'm gonna have to pay. And then the other trade I had here that I opened January 11th was a covered call on Box at an 18 strike. I got in at 16.8. I got out February 18 at 17.93. So that gave me a $102 net profit. And then I had another naked put on Switchback Electric at a 30 strike. I think the stock was trading at around 37. I collected $3. I went with the March 19 expiry. And then this week, so this, I don't think closing it at $2.16 was a good price. I should definitely hold on to it. But I wanted to make my goal of $500 per week. So I was looking for anything that was profitable to close. So this one I ended up closing for $2.16, gave me a $72 net profit. And sometimes I have put spreads that I close for less than $50 profit. So for me, 72 is a good deal, not bad. Plus I have a lot of positions open, so I didn't want to be stuck with a lot of positions in case the market decided to correct. So I still have a bunch of positions open. I've got about 14 open right now. So anything that had a decent profit, I decided to close. So that was Switchback Electric. Now Palantir, this is an interesting one. I'm a little frustrated with Palantir, but this is not the trade. Actually, I'll go through the trade over here. It's this one here that is really frustrating. But this one, the day that Palantir, actually let's look at the chart here. So if we look up Palantir, PLTR, so right now it's at 29, ridiculous. But if we go 5 days back, so you see this drop over here. So Palantir was trading at around 29. Then the next day it decided to drop all the way down to 24.86. So on that day, I entered Palantir with a covered call at a 24 strike. I went to April 16. So I went almost 60 days away. So this 24 strike, I paid $20.18 to get into the trade. So that means if Palantir by April 16 is above 24, the max I can get out of this trade for is $24. But I paid $20.18 to get in, so my max profit is the difference, almost $4 or $400. The next day, if you look at the chart, the next day Palantir jumped. So with that jump, I was able to close the covered call the next day for $21.56. So that gave me $126 net profit. So in one day, $126, or I can wait 60 days to make the full $400. So for me, it made sense to just take the profit quickly because it jumped so much. So that was the Palantir trade. So that gave me a total net profit for the week of 542. Now let me go to that. Actually, let me talk about the capital required. I didn't mention it. So put spread is defined risk. So it's the difference between the strikes. So $5 minus the credit received. So this one's about $500. This one is a covered call, so it's exactly what I paid. So I paid $13, so the capital required was about $1,300. So this is 500, this is 1,300, so let's just say 2,000 combined. Fubo is about half of the strike, so about another 1,500. So let's say 3,500 total. Box is another 1,500, so 5,000 total. Switchback electric was a naked put, and it's about 50% margin requirement. So I'm going to say half of the strike. It's actually less, but just to round it up. So 1,500. So I'm at 6,500, and Palantir is another $2,000. So about 8,500. So all these trades here combined took less than $8,500 of capital. So let's just say $8,000 of capital. And total profit I said was 542. So for those who look for the return on capital, it is 542 divided by 8,000 for that week. So about 6% for that week return on capital. Now my remaining open trades, let me go through them. So on February 10th, I did a put spread on Snow or Snowflake at a 250-245 strike. Collected $1 for March 5th expiry. March 5th is 2 weeks away. And let's see where Snow is trading at. I think Snow dropped this week, like everything else. So remember, my strike is 250. Snow is trading at 290. So I'm 40 points away. Should be safe. I've got an order to close this automatically for 37 cents. After commissions, that would give me a $50 net profit. I've got a naked put on APXT at a 15 strike, collected $2.15. I think it's trading at around the same thing right now, so it's not closable yet. I've got a Unity put spread that I opened after earnings. So after earnings, Unity dropped. So I've got a put spread at 105, 100, and I think Unity is down, I think almost 115 about. Let's look it up here. So that's not doing too great, and I'm not able to close it either. So it's at 121 right now. I still have to hold on to it, and I've got an order to close it for 37 cents. So that would give me also $50 net profit at the end. Got a naked put on Root here at a 20 strike. Collected $2.75 this week. I think it had a low of $2.20. So could have closed it for about $55, but not enough after commission, so I didn't close it. Got a covered call on Higher at a $10 strike, not closable yet. I've got a naked put on SNPR, 15 strike, collected $2. This one I could have closed this week for $1.20. Would have given me $80 gross profit, and then after commissions about $68 net profit. So this is the trade here that was very frustrating this week. So Palantir at a 24, right now it's at a 24 strike, but it used to be a 27 strike. So I opened this trade February 16th. So if we go back to Palantir's chart, PLTR. So on Monday, Tuesday, when the market opened on Tuesday, Palantir had earnings Tuesday before the market opened. So Palantir dropped. So when it dropped, I sold a put at a 27 strike for this week. So for the same expiry of February 19, I sold a 27 strike, collected $1. And then the next day, Palantir went up, but it wasn't enough to close the trade. At some point, The put option that I sold for $1 was trading for 50 cents, but still not enough to close. After commissions is not worth it. Unless I had 10 contracts, then for sure I would have closed it at 50 cents. But then the next day, Palantir dropped to 24. So I had two positions. Well, I had one position. I had the 27 strike that was completely breached now because Palantir is trading at 24. And because it dropped so much, I opened another trade, but I opened it as a covered call. And I went further to April 16 and I went at the 24 strike. So this one, like I mentioned, I was able to close it the next day. But the 27 put that I had was completely breached. Now, I was pretty sure from experience, from seeing this market so many times, that the next day Palantir would jump back up and my 27 strike would be out of the money and this trade would be a winner and I'd make $100 on that trade. But at the end of the day, I noticed that the extrinsic value on the put option was dropping. There was less than 15 cents on it. I was worried to get assigned automatically the shares. I didn't want to pay that $25 fee from Questrade. So I decided to play it safe and roll the put. So on Thursday, when it was trading at around $25, $2 in the money, I decided to roll it to the 24 strike. So I made the trade safer. I went from 27 strike to the 24 strike, but I went to March 19. Now, if you look over here, I had initially collected $1 on the 27 put, but then by rolling it, I collected an extra 58 cents. So now I collected a total credit of $1.58. I'm at the 24 strike, but I have to wait till March 19 for me to win on this trade, or a bit of time goes by and I can close a trade for less than what I collected. So my total credit is $1.58. I'll try to close it for maybe 50 cents or less. But it's just annoying because if I had just held on to it, like I knew for sure that it was going to bounce back. The next day on Friday, it closed at 29, as you could see here. And it just jumped like crazy. I think it jumped 15% the next day. And my strike was 27, so it was very safe the next day. And I would have made $100 for that week instead of having to roll all the way to March 19. But I mean, I'm still in a good position because I've got a 24 strike, but it's just annoying because I knew it would happen, but I got scared and decided to roll. So once again, I took action too early, regardless. So that's the annoying position that I have with Palantir right now. Then I've got a naked put on Peloton at a 120 strike, collected $3. This was actually worth more than $4 during the week, but it dropped back down below $3, but it's not closable yet. Then I've got a naked put on RMO at a 15 strike, collected $2, expires March 19. It's not closable yet. I've got a naked put on Sumo Logic, 35 strike, collected $3.20. This one's really not doing well. I think it was trading above $4 at some point. So this one's not closable at all. And I think Sumo's trading around 36. I've got a naked put on HIMS at 17.5 strike, collected $1.30. I've got that Fubo naked put that I mentioned earlier. It was supposed to be closed, but I accidentally closed only one contract. So I still have this trade. I think Fubo has earnings this week. I would prefer to close it before earnings. If earnings are good and the stock goes up, then that's going to be great because this $4 is going to be really worth nothing. But I'm afraid that Fubo drops after earnings. Then I'm stuck with the stock because maybe volatility might drop, and who knows how much it drops. So hopefully I'll try to get out before earnings if I can. And then I've got a naked put on Wish because it dropped a lot this week. Got a naked put at 20 strikes. So I opened it February 18. In fact, it dropped I think almost every day. So if I look up Wish here, February 18 was Thursday. So yeah, so you see it's been dropping several days, but I got in over here when it was trading at around 22.4. But then the next day it dropped even more. I didn't open another trade, but I've got two trades on Wish, opened the same day actually. So I've got a 20 strike, naked put at $1.40, and then I've got a covered call, but this one I went all the way to October. So this year I'm just trying something, I'm just testing something out, where if you watched my portfolio update video, where I'm trying to, in my registered accounts, trying to simulate like a GIC or a dividend stock where I get paid upfront. So this was a 22.5 strike, but I only paid $15 for this because of the covered call that I sold. Because of the call that I sold, I collected $7. So that's $700 that came into my account. I dished out $22 to buy this stock, but I sold a call for $7. So $700 came back to me, but it's confirmed profit only if by expiry of October 15, the stock is above 22.5. But if the stock jumps before like the 30 or 35, I can probably get out of the trade sooner. So that's what I'm just trying to test out, is if I can sell long-term calls and see how they act, if they're profitable or not. And I sort of see them as dividend plays. Instead of collecting 4% or 5% yield in dividends, and you're not even collecting it upfront, you're collecting it every 3 months, why don't I sell a 1-year call that pays me 30% or more? Here, I collected $700 on a $2,200 investment. So that's a return of 31%. So I collected 31% in call premiums, and that's not even 1 year. It's only till October 15. So that's not even 1 year. And as long as the stock stays above 22.5, then that's confirmed profit. So it's a growth stock. It's not a blue chip stock, but I collected $700 up front, and as long as it stays above 22.5, then I'm safe. And usually, most likely, the stock is I'm probably gonna regret selling a call and just wish I bought the stock only, because then I would have gotten way more capital appreciation from owning the stock than selling a covered call against it. But that's not my goal. My goal is to collect premium right away and see what happens. So I wanted to announce that I've started a WhatsApp group where I share my trades live as soon as I place them, or even before I place them. So for those who want to place the same trades as I do, although I've got a video where I talk about, or I explain how I find my trades, but still some people like to get trade alerts. Those who don't want to spend time during the day to look for trades and just want the peace of mind of just getting alerts and copying them right away, I absolutely don't mind. But I think it is important for people to understand that not all the trades I do are going to be profitable. I mean, I share all my trades on YouTube, so you see everything. And you could see that I've had weeks where I lost money. And even if I look at my P&L per month, I don't know if this is refreshed. Let me refresh it. Refresh here. So you could see that September was a losing month. And I actually had a week in September where I lost $1,100 US. October wasn't that great either, made $500. But since I started logging my trades, I mean, July was 1,000. This is in US. August was 1,200. September was a loss of 381. October was a profit of 593. November was a profit of 1650. December was a profit of 2523. January was a profit of 3162, and February is not over, but it's going to be less than January, that's for sure. But it's still decent. I mean, 2,200 US for 3 weeks. We've got 1 week to go. So these are my profits since I started logging my trades in July. So if you want to join the group, the WhatsApp group, to get the trades as soon as I place them, it's $25 a month. I'll leave the link below, contact info below. And as you can see, most of my trades, or all of my trades, are option selling. Like, I only sell options. It's not going to be swing trading or buying stocks. It's all going to be option selling trades. And most of my trades are put spreads, naked puts, and covered calls. So it has to, if these are trades that you're comfortable with and you know how to manage them in Questrade, you know how to place them in Questrade or whichever broker you're using. But I'll be sending the alerts in this format. So here are some screenshots of the alerts that I send, and sometimes I'll type it out. Sometimes I'll send a voice note, a recording. So if you want to share, so if these are the type of trades that interest you and you want to participate or join me on my trades, I've got no problem with that, of course. But it's important to be aware that there is a risk. Not all trades are profitable, but you could see the pattern. I mean, I share everything, and since November, I would say most of my trades are profitable. So for covered calls, you need level 2 with Questrade, level 2 options, and you could do covered calls in registered accounts. for put spreads or credit spreads, but I do mostly put spreads than call spreads. So for put spreads, you need level 3 and it can only be done in a margin account, and you need a minimum equity of $5,000. And if you're going to be selling options, you definitely need active trader pricing with Questrade. Otherwise, Interactive Brokers is pretty cheap. And then for naked puts, which is right now the bulk of my trades, as you can see here, if you look at my opening trades here, or my open trades, they're mostly naked puts. You're going to need level 4 options with Questrade, and it's a minimum equity of 25K. Now, if you link your TFS with Questrade, if you link your TFSA to your margin account, the 25K equity can come from your TFSA. It doesn't have to come from your margin account. Now, whatever maintenance excess you have, whatever equity you have, try not to go over 50% of that available buying power. So if, let's say, you have $50,000 maintenance excess, don't make trades that will make you go over $25,000 of maintenance excess. Always try to leave at least 50% of your maintenance excess available, so that you have room to manage trades in case there's a market correction. You have room to hold on to a trade and roll it, and maybe place a new trade when premiums are even higher. So just something important to keep note of is never use all your capital when you're selling options. All right, so I'll leave the link below if you're interested in joining. If you have any questions, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.